Welcome back to Market on Close. We've got less than 10 minutes left in the trading day. Time now for the big picture. For that, I want to welcome in the team from Charles Schwab. We've got Nate Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research, and Cooper Howard, Director and Fixed Income Strategist, also Schwab Center for Financial Research. Thank you guys both for kind of recapping the action that we're seeing today. Nate, I want to start with you. I want to ask you a question really quickly, though, about volatility before we kind of get your take on some of the price action that we're seeing. VIX lower today. Is this calm before the storm? Volatility was expected to be a theme this year. Is this just kind of a temporary pullback?
Well, it's a really good question, Diane, and I think that the answer is, we don't know for sure, but I would suspect that it's going to be higher than average volatility here for the next couple of months. I think the reason that it has pulled back as it has is because we got the tariff bombshells, so to speak, these headlines that came in, and yet they were, quickly resolved to a large extent. We still have the China tariffs that are out there, but I think because of the familiarity of these types of tariff announcements that we got from Trump 1.0, and then seeing how they're playing out this time, the market is feeling a little bit more comfortable. The VIX is at 16 now. Just for reference, when you have a VIX of 16, that implies a daily move of 1% in the S&P 500, either higher or lower. If you look at the S&P 500 really over the past couple of months, it's been moving about 70 points a day. Now that's realized volatility. The VIX is looking at forward volatility. So it's saying in the 30-day estimate going forward, right now at a 16 level, we're looking for 1% moves higher or lower. But Diane, I do not think we're out of the woods in terms of volatility. I mean, this is, just an environment that has the potential to contain a lot of surprises.
I know. Every Monday we get a new one. It seems like the beginning of this week was tariffs. Well, it was technically Friday, but really Monday in terms of the reaction. And then last week it was DeepSeek. But Cooper, I want to ask you about the moves that we're seeing in fixed income. We've got yields. We've got the 10-year pulling back 9 basis points on my last check. They seem to be moving lower on the concerns about, kind of some slowing economic concerns. But what is the yield curve suggesting when it comes to the economic outlook from your point of view?
Yeah, I want to piggyback a lot on what Nate said, because what we're seeing in the fixed income market is a lot of concerns, and I think that that's translated into potential volatility in the fixed income markets as well. Like you said, just earlier this week, we had concerns over what the impact of tariffs are going to be. Those were obviously pulled back and delayed until 30 days, so that's going to be kind of another headwind that the market's trying to face. We also have the jobs report that's coming up on Friday. We saw JOLTS showed that the labor market's probably stagnating a little bit, so we'll see if that's going to be confirmed on Friday. And then we also have the question of how much is the Fed going to cut, if they are going to cut. Our expectation is that they are going to continue to cut this year, but with inflation relatively elevated and not showing a significant progress down to their 2% target, there's still a question mark of what the Fed is going to do this year. So couple that into a lot of the proposals that are coming out of Washington. And I do think that what the fixed income markets are saying is just concerns over the potential for growth going forward.
All right. Nate, I want to ask you about some of the action that we're seeing within equities. We've really seen this kind of recovery since the start of the day, especially in the tech sector. You have NVIDIA back, kind of playing leadership, really balancing out the struggles that we saw with Alphabet. There was a lot of concern about cloud, and they didn't meet expectations. Is that a red flag or a yellow flag when it comes to Alphabet?
Well, I think when we're looking at mega cap tech and the undergoing evolution of this AI thesis, this secular growth story, the evolution of this secular growth story that's going on, I think we're still feeling this out. I mean, we did get that shock from DeepSeek, like you mentioned. Investors have largely been able to overlook that to some extent and say, okay, well, maybe this is greater for wider spread adoption of AI. Maybe the infrastructure doesn't get as heavy on the investment, but now we're going to look for the inference plays, look at your Palantirs, ServiceNows, et cetera, the application of AI beyond just the LLMs, the large language learning models. And with Alphabet there, yeah, I mean, their cloud growth decelerated. But I think with Alphabet, I would keep in mind, they're coming into the report at an all-time high. And that kind of a setup coming into the report and then exhibiting some of the cloud growth deceleration that we saw, I'm not surprised to see the stock trade lower. I think that likely has to do with the setup, and it likely has to do with growth deceleration. And we saw that with Microsoft as well when they guided Azure growth a little bit below estimates as well. They did increase the CapEx spending up to $75 billion there. I don't think the markets are too concerned with that, at least not right now. So, Diane, there's still, I believe, this question mark of will these mega cap techs and their heavy spending still get that ROI? I thought DeepSeek would have really challenged some of these post-earnings reactions, but largely, given the setup heading into the reports, markets are still or investors are still in a forgiving state, and I think the AI narrative is still unfolding.
I like the way you put that. One, we know the AI narrative is still unfolding, and it's like, it's kind of the laying down the track as the train is driving. That's what it seems to be the case in this space. All right, thank you so much, guys, for insight and perspective, whether we're talking about equities or fixed income. Our thanks to Nate Peterson, Director of Derivatives Analysis for the Schwab Center for Financial Research, Cooper Howard as well, Director and Fixed Income Strategist.